Hey guys, George here, and if you stuck to your guns, bought that dip, well, it's a good day for you. If you guys remembered my last video, I mentioned Tesla, how great of a company is, how amazing it is. Up 20% today, leading the charge in the market. Palantir, up 8%, almost at that $25 buy mark I had originally, which, like I said, it fell way under that, scooped it up, climbing right back up. GameStop, up 100%. Continue going up unless some institutional fund is just like, hold up, pump the brakes, no more trading like last time. But so far, smooth sailing. The entire market just revived itself. Apparently, everybody bought the dip just like I said. Nobody else said it. You can call me Nostradamus. Taking a look at yearly charts, this is the biggest recovery since that flash crash back in September. Also, another weird thing is this is like a cyclical crash. If you remember last March, the market died. It felt like the sky was falling. And now the same thing just happened. Maybe a week or two off, but it feels really familiar. Do you guys remember what happened after that crash? Just green pastures, bull run, bull run, bull run. And that bull run lasted until, what, now? Which the correction we had isn't even that big in the grand scheme of things. So if we even follow a fraction of the pattern we had last year, we are looking at a really, really good year. And I know there's a million analysts right now that are saying,
oh, we're in a bubble, we're gonna explode, it's the dot-com all over.
But the way I see it, I really see the market expanding, broadening its horizons, diversifying itself. Everything's not in tech. Tech is a leading contributor to the market going up, but the entire market is going up. Look at the Dow. Everything is going up. But right now, value is going up, growth is going up, recovery is going up. Cruise ships up, airlines up, banks up, food companies up, tech stocks are up. And now we have these growth companies with revolutionary products, technological advancements that we can't even comprehend. And they're comparing it to the internet era. It just doesn't make sense. And are some of these companies overvalued? Of course, Nicola. But the market is very strong with its conviction to growth right now. When stimulus passes tomorrow, which it most likely will, the market will blast off again. The economy is slowly reopening again. People are going to get their stimulus checks, and instead of throwing it into a bank account accumulating 0.4% interest, they would rather put it into the market. The retail investor is growing. The stock market is expanding outside of just institutional investors. And these retail investors are investing in products that they use themselves, that they see the future using. Technological advancements, things that will change the world. Now, are meme stocks a thing? Of course they are. It's just the culture we're in. But people should be able to invest in a company like GameStop, AMC, or whatever until it's at whatever value they care, whatever they see fit. Is it risky? Yes, but it's their money to do as they please. It shouldn't be up to the institutional investor to be like, no, I think, it's a little too risky for them because they're losing money because it's a company they shorted. But they're allowed to all get together in groups, talk about which company to short and manipulate the market to what they think is best. And I bet right now all these hedge fund managers are all getting together and telling all of their clients, well, guys, we rotated back out of value, back into tech because we strategized this and we saw it coming and we saw the cyclical change and whatever BS they're spouting to their customers. But all I saw is if you stuck to your conviction and invested in a company you believed in and did the research, you were going to do amazing in the long run. I saw Tesla hit $600. Even before that, sub 700. It just kept going down and down. My alerts went crazy. I believed it will recover. I believe it will go to 1,000, if not more, within the next 5 years. And I get it. Some people have completely other views on companies that I agree with. They can think it's completely worthless. But that's why it's up to me to do my research and you to do your research on what company you want to invest in. I could have been totally wrong about all my buys, but I did my research, like I said, and I believe in the company. My conviction is strong for the company, and I believe it will prosper. And because of that, I think it's a great buy. So the moral of the story is do your own research. Invest in companies you have researched and you believe in. You believe in their product. You believe what they're going to do in the future. And invest in these companies when they're down, when they're still reinvesting into themselves, when they haven't made it a profit. You remember Amazon? Amazon didn't make a profit forever. Look at them now. One of the most profitable companies in the world, one of the most valued companies in the world. But you know, back in the day, Jeff Bezos didn't know what he was doing. He was just selling books, not even turning a profit. Same thing with Tesla now. It's a cyclical story. And then when these companies start skyrocketing, the institutional investors come out and the people come out of the cracks. Well, yeah, I called it, 20 years ago. I knew this would happen. No, you didn't believe in the company. You're just riding the bandwagon. So remember, when things are red, buy that dip if you believe in the company. You don't want to buy when things are skyrocketing green. Green might feel good and look good on your portfolio at the time, but you will thank yourself a ton if you bought when everything was down and you look in 5-10 years and you're like, wow, I really got a deal. But like I said, what do I know, right? So do your own research and do not invest what you can't lose. Thanks for watching, guys, and I will see you next time.